Today I am going to be talking about a concept that I use very frequently that helps me catch big moves consistently, and that concept is key opens. I'll be explaining exactly how to go about trading these key opens. So let's get straight into it. There are 3 key opens I monitor every single day, and that is 6 p.m. New York time, also known as True Day Open, 00, which is Midnight Open, and the 10 a.m. key open. 10 a.m. is the main one I monitor, as that key open is in the same session that I trade, so that's the one I like best. Now at 10 a.m. is when the new 4-hour candle opens, and if we look on the 4-hour, we can see that all the 4-hour candles have a top wick and a bottom wick. So when we scale down, we expect price to manipulate in the opposite direction of the way that we want price to go to create that top or bottom wick, and then to flip and retest that key open, and that's when we're looking to enter. So if we look at this example, we can see that as soon as 10 a.m. opens, we first manipulate to create that wick, then we strongly displace in the other direction. Once that happens, with that displacement leg, you want to mark out the fib tool and see if 10 a.m. is at a discounted level. If it aligns with CE of the fib, that makes this trade even better. And once you see that price is at a discounted level, you can either place a limit order or wait for an entry trigger like a CISD or a rejection block. I will be getting into entry triggers in my next video, so if you guys do want to see that, let me know in the comments, as entry triggers make your trades a lot safer than just limits and increase the probability of the trade winning. Now, talking about risk, you want to have anywhere from a 5 to 35 point stop loss depending on how confident you are in that trade. Me personally, I like to have anywhere from a 15 to 20 point stop loss, as I don't want it to be too big or else it lowers the risk to reward, and I don't want it to be too small, as many times I will get stopped out and then price does run to my full TP. So you do want to give the trade a bit of breathing room, as we are trading the most volatile session, and you want to be targeting a minimum 1 to 4 RR. Any higher than that and you can take partials along the way. Now let's look at another example. Now on the 1 hour, I'll mark out 10 a.m. key open and drop to the 5-minute time frame, and as we can see, we are creating that opposing wick, then we displace in the other direction. Now you want to use your fib and see if 10 a.m. lies in discount of the most recent leg, and you can just place your limit, and as you can see, it does work. Now not every day will you get a good setup, so you want to wait for those really obvious setups. You should get around 2 a week, and that is because this is a high RR strategy. So unless you want a low win rate, I suggest you take less trades and only focus on the good ones, as that is exactly how I was able to get over 5 figures in payouts in the last 3 months. If price keeps going through the key level multiple times, it makes the key level weaker. So if you do see that, don't take any trades unless you have a very good draw on liquidity.